Hello guys, welcome back to a new video, and in today's video I want to give you guys a weekly breakdown and an update on the dollar index, gold, the Nasdaq, Dow Jones, as well as Euro USD and GBP USD as well. If you're new here, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please consider leaving a thumbs up, and let's try and get to at least 100 likes on this video there as well. Firstly, happy Thanksgiving to all my people on the other side of the world. Hope you guys are having a beautiful day there also. Now, first things to keep in mind is that we've seen the dollar index quite bearish this week, and we saw the stock market, being very bullish this week, including the Nasdaq, which is still uncertain about the job employments in that sector, which is driven by the Nasdaq companies over there as well. Firstly, we have the PMI that came through lower, but this was expected because the recent inflation data show that the inflation is starting to cool down, and as a result of that, we could potentially see everything that was quite aggressively high before is starting to show some signs of redness. We also have the FOMC minutes, which is what we are going to discuss. The FOMC minutes gives us an indication in terms of what we can expect from the markets going forward. And basically, the way in which we understand this, if the Feds give us a hint that they are going to hike the interest rates, this increase the value of the dollar index. If the Feds gives us an indication that they're going to lower the interest rates, and that basically means that we can expect the dollar index to decrease in value, precious metals to increase, and the stock market to increase there as well. Now, with the recent inflation data that we received, we obviously saw that the Feds are starting to make some progress with bringing inflation down, and basically we expected the dollar to weaken because with a lower inflation number means a lower interest rate is expected on the books. The Fed did hike interest rates by 0.75 last month. We do expect the Feds to go slightly lower in the December meeting on the 14th of December, if I am correct. Let's see. There we go, 14th of December. Wish I knew my own country's economic data so well. But in any case, so basically that's how the economic data works. Now, we're going to go over this article by CNBC purely based off the recent meeting that they had yesterday, and we're going to see what we can find over there. It says here, Federal Reserve officials expect to switch to a smaller interest rate increases soon, according to the minutes from November meeting released Wednesday. Basically, they expect it to be soon. Now, the market sentiment obviously expect that to be in the December meeting, and this is one of the reasons why we saw the dollar index basically, being very aggressively sold off, because they expect the Feds to not hike interest rates as aggressively. It says here, some officials expressed concern over the impact rate increases could have on the financial stability and the economy. The only way to bring down inflation, unfortunately, is to hike interest rates. If we go back to what we had in, during the pandemic period, which was in 2020, I think it was here. No, Jim. Oh my God, why am I so far? I think it was somewhere year 2020. Yeah, we saw the dollar decrease in value there as well, and this was because they hiked while the interest rate was taken back to zero, and this is basically we started seeing the dollar gain that strength back as the Fed started hiking interest rates there as well. Now they have to basically reverse what they did, and this is why you see what you see here is basically what you saw there as well. It says here markets have largely expected the Fed to dial down on the intensity of its policy tightenings. The minutes helped confirm that. And basically, after the recent inflation data came through, the markets obviously expected, because the inflation data was lower, the market expected the Fed to hint at a lower interest rate because they are starting to make progress at the moment. It says here Federal Reserve earlier this month agreed that smaller interest rate increase would happen soon as they evaluate the impact policy is having on the economy. Meeting minutes released on Wednesday as indicated. It says here, though hinting that less severe moves were ahead, officially said they still see few signs of inflation abating. However, some committee members expressed concern about risk to the financial system, so the Fed continue to press forward at the same aggressive pace. Sorry, if we do see some higher CPI numbers come through before the December meeting, we can definitely expect the Feds to increase it. But if those CPI numbers come through lower before December, then there's no reason to hike the interest rate for the Feds. Now, you're more than happy to go and read this article, the entire article, because I'm not going to go through all of it, but I just want to give you some of the important points. Now that we're done with the fundamental data, it's time to take a look at the technical information that we have in front of us. Also, please let me know down in the comments section exactly what your thoughts are on the market. If you think it's bearish, do you think it's bullish? Like, tell me where your mind is at there as well. Now, also, if you start on the monthly time frame, the first thing that we can identify is something that I've been speaking about for a lot of time. The market broke below important support and it came back to test it as resistance for the first time. And we definitely expected that pullback out of the consolidation phase that the market printed. Resistance broke above that, and we can definitely expect the market now to pull back and come and test it as support. The question is, will support hold or not? But only time will tell there as well. So we are going to use this as a short-term target for us in the market, being able to look for that selling opportunities. Looking here at the weekly time frame, what do I see now? From a weekly perspective, you can see that the market had printed one massive bearish candle here to the downside. I did expect a quite, like a nice impulse, but we didn't get that. However, if you do look slightly left, you can see that the market had broken. That came back to test this very important structure that acted as resistance. Support got broken and it's back to test it as resistance. So we do expect the dollar index to continue lower. The dollar index is now faced with new support, as we can see over here. Then we need to wait for a clear break below this level, which is exactly what I expect after today to take place, as it is Thanksgiving there as well. Now, as we can see over here, the market has just broken below this strong level of support that had opened up with a gap over there, but we will be faced with multiple prices that we need to take into consideration over here, but we are not going to dive too much into that. Now, the best way I would say to approach this, the market had broken below the strong level of support that is now turned resistance. This is on that retest. You definitely expect the market to continue lower. So we would basically wait for the market to pull back and then look for some sign of bearish momentum, and then look for a good sorting opportunity, and also take your Fibonacci from the high to the low. We do not have a 0.382 pullback, so I do expect the market to basically continue slightly lower, potentially creating an equal low there first, and then from there continue higher there as well. Next up, we do have gold. Now, gold has been quite bullish and the price action on gold is quite interesting. If you look left, you can see over here that the market had broken above strong resistance, and also from a monthly perspective, the market is still currently trading in bearish territory, as we can see over here that the market is now testing this structural level over here as well. The good thing is the market had broken back above this level, as we anticipated the market to break below, hit that level. Unfortunately, the inflation data came through lower, thus moving the dollar index lower and moving the prices of the precious metals continuing higher once again. If the inflation numbers does continue lower, I do expect gold to continue back, reach that previous high, but we're going to use this as a long-term target in the market there as well. From a weekly perspective, what do we see now? We can see how the market had printed this W formation over here. Now, after a W formation, you normally expect a pullback to the neckline before that continuation to the downside. Do I expect the gold to continue lower? Probably not anymore, but basically it's probably a slight pullback and then a continuation. But I would suggest we'll probably move up slightly higher first before continuing lower on the daily time frame. Like I said, the price action looks very clear over here. We had the market printed support, resistance, broke above resistance, came back to test it as support. Definitely expect this move to the downside. And also, if you take your Fibonacci from the low to the high, because we had this massive impulse, we got that correction, and we can clearly see that we do have a minus 27 that is lining up perfectly with this level over here. Now, from where I'm sitting, I do expect gold to continue higher to hit that level, and then potentially from there we could potentially see a pullback, because the market has to now complete the next impulse phase in the market there as well. Next up, what we are going to do now is we're going to take a look at everyone's favorite, which is the Nasdaq 100. Okay, so we are sorry about that, guys, but we're going to take a look at the Nasdaq 100. Now, basically, from the daily perspective, we can see that the Nasdaq is currently approaching some very strong, very strong structural level over here. This level acted here as support resistance, and we can see how the market is about to come back to hit that level as resistance once again, giving us an indication that we can definitely expect the Nasdaq 100 to continue higher, and then from there we could potentially monitor the price action once again. I do expect to pull deeper pullback, and then from there probably see this take place here as well, because the market is currently also breaking above very strong resistance, and then we can definitely expect the market to pull back and test that as support there as well. Next up, we do have the Dow Jones. The Dow Jones now is a place for clearance to this level over here. Now we can see how this market also has a very important structure that it's currently faced with at the moment. Now the best way to approach this is obviously wait. You can see how the market is busy printing a clear impulse. If you take your Fibonacci from the low to the high, somewhere around here, you can expect the market probably to move slightly higher and then pull back, and then let the market drive this continuation to the upside here as well. In doing so, will the market then break above this strong level of resistance that would then be turned support there as well. Next up, we do have Euro USD, and Euro USD. So it's very important to just monitor this also, to monitor the euro. But because we expect dollar weakness, we can see the market broke below this very strong level of support. Back to test it as resistance. I do expect some weakness before a continuation or a break above that level. Here on the weekly time frame, we can see here the price action is exactly in terms of what I've just spoken about. And we can also see, if you look left, you can see here the market had broken above this level of resistance, came back to test it as support. Now we do expect the market to continue higher. The only way that is going to take place is if we do get a clear weekly close above that level there as well. Alternatively, a slight pullback and then a continuation should be on the books there as well. Similar price action to gold, massive impulse, soft an impulse. You expect a correction. We had a pullback to the 0.382. We definitely expect the Euro USD to continue higher and then go and hit that level over there. But again, the only way to do that is to get a clear daily close above this level. Then we can definitely expect this market to continue higher there once again. Next up, we've got GBP USD. There's also most recently with the high interest rate decision broken above the strong level of support resistance. We expect the market to pull back slightly and then definitely continue higher there as well. My good friends, that is all from my side. Have a good weekend. Also, I am running a special on the Signal services because it's Black Friday. You can now get 1 month Signal services for only 750 and for the month, my good friends. Now, thank you for your time. And as always, cheers for years.